Yo guys, it's John here with Option Lab, back with another video recapping my November portfolio performance. I'm going to show you guys some of the trades I took, a recap how I had a $931,000 month, and I'll even show you my account so you guys know it's legit. And I'm going to run through the strategy I used to hit those numbers, as well as how I screen for stocks to play those different strategies. And as always, I know a lot of you guys have been talking to you in my Discord. Please, if you find this video interesting, join my free Discord. I talked to a lot of you guys in DMs. It's been pretty productive, helping some of you guys get started with this. So, yeah, I like to see how much value I can provide in this video. And if you're interested, join up. Okay, so 931K in 30 days. So if you see here, let me shrink my thing. So this is a screenshot from my Schwab account. You could see here I have the date set from November 1st to November 30th, and that being the net gain. Now, some of this is just long stock holdings. It's not all option premium, but a significant amount is. So let's just go through kind of like the strategy and what I trade. So if you are new to the channel, I trade option premium selling strategies. So that's selling to open naked puts, naked calls, strangles, put spreads, call spreads, all mostly the wheel strategy and some more advanced techniques. So if you guys, I'll run through quickly what the option wheel strategy is, and then I want to give you guys some tips on what worked for me to actually hit almost $1 million month. I'm going to go through some of the steps and then setting up a screener. And I'll show you guys some trades I took. And yeah, that should be good. So 931K in 30 days. Let's get something cleared off the plate here. I do not expect you to be making this much in a month just starting out. So let's just say you divided this by 1,000. If you're making an extra 900 a month, that's huge. You could pay for your apartment rent with that money, or cover, groceries, food, dinner, whatever you want to cover. We're just making extra 900. That's a few hundred a week, and that's totally possible even if you have a smaller account, especially if you're trading safer, higher probability option strategies. A lot of you guys I know come from trading futures and crypto and all the shit that blows money like there's no tomorrow. So this is a totally refreshing strategy that I really like and have been successful with. So what is the option wheel? So the first step is selling an out-of-the-money cash secured put. I'm typically around the 20 delta range, so 80% probability that the stock stays above that put strike and I keep the premium. If it drops below that price by expiration, I get assigned 100 shares. Now I own 100 shares that I can make money on because I own them. Those shares can go up. Not only can they go up in value and I make money on the difference, I can also sell out-of-the-money covered calls. And if the stock stays below those, I write another round of calls and the stock goes up. Eventually, I'll lose the stock, and then we start back at the start, selling out-of-the-money puts. And you could do this with naked calls too, so I do that as well. So what do I mean by 20 delta? I'll get into that. Let me just show you guys kind of like the criteria I use to pick stocks that I could use, that I could write puts on, write calls on, or in most of your guys' case, writing spreads on. So steps. Number one, I find high IV stocks that either have news, earnings, or more generally an overextension in one direction or the other. I then sell a 0.2 delta credit strategy, right? So the strike price I'm choosing, right? So let's just go to this Target example. Let's say they have I sell a put on this. If I sell to open the 122 put, I collect a premium for doing so. So let me draw this. So I sell to open this 122 put, and for doing so, I collect some premium. And as long as that stock stays above my strike price by expiration, I keep that premium, and I don't get assigned shares. If it drops below, I still keep the premium, but then I get assigned X number of shares at 122, depending on how many contracts I wrote. So let's go back down here. So what does this mean? So 20 delta is saying that there's an 80% chance that the stock does not go below, in that case, my put strike price. So there's an 80% chance it stays above my expiration. I keep my premium and I redo the wheel. 3, So I either collect it or I get assigned the shares and then I do the wheel, which is writing covered calls. Next, defining risk and capital management. So for a lot of you guys, it's most likely not going to be realistic to be selling a ton of naked puts. So you can do a -1 put and then below that create a bull put spread or a condor, or there's a ton of variations of this, right, that I cover in my Discord if you guys want to talk about it. So number 5, screening for winners. This is the most important step. How do you actually find stocks that are high IV, have news or earnings, and an overextension? So I use an expensive program. It's $25K a year called Bloomberg. And this gives me all the data I need. So I post these picks to my newsletter every week. But to summarize, I'm screening for implied volatility, simple standstill return, market cap, different fundamental things like RSI and MACD, and all of those criterias, they're essentially creating a filter, right, that funnels down into, the stocks that I ultimately pick, right? So each level of this screener kind of narrows it down until it's stocks that I'm pretty confident fit all of my criteria. As you can see, based on that criteria, it's been pretty successful this month, almost $1 million month. So that's pretty good. So let's go back down here. By the way, if you guys want to see, this is my account. So let me just refresh this so you guys can see that it's legit. So here's the account, and this is for 3 months, but you get the idea. All right, so where were we here? So most important step, screening for the stock. So once you have a method for finding winners, and like I said, I send these in my newsletter and some on Discord, that gives me consistent plays to trade this strategy on. All right, so let's go down here and look at some examples. So you can see here, just like in the last few days, just because Bitcoin's been so volatile, I've been playing a ton of MSTR. Like you could see, just that trade on 4 puts was, about $4,000. Some of these are like kind of shitty stocks that I just play for fun. I think these were covered calls, but you could see here, like I'm collecting $2,000, $3,000, $4,000 in premium with almost every trade I take. And these are just one button. I literally enter it, don't even barely watch it. Just making money in the background. So FedEx, another 2,000. And you guys get the idea. So this has been the strategy that has allowed me to, this year alone, get an M4 competition. I've been traveling all around the world with my friends and people I actually want to be around. And it's given me the freedom to trade in a way that doesn't require me to sit in front of the screen and pretend that I know what I'm doing, looking at charts and all this stuff. I'm more of a probabilistic person. I like to see probabilities. I like to see what is my chance of making money on this, right? So when I enter a 20 delta put, I know 80% likelihood that succeeds. If you're just trading, day trading, or buying options, right, you're just guessing, right? It's a 50-50. And not only that, it's not even a 50-50 because when you buy options, you have to be right about the direction, the time that it takes to make that the magnitude of the move in the direction you want. There's just a lot of extra elements that make it inferior to option selling strategies. Now, not to say that this doesn't have its own risks. Obviously, it does. But as you can see here, it's been a pretty good month. So if you guys have any questions at all, feel free to shoot me a message on Discord. And I'm glad to help you guys get started. Anyway, I'll see you guys in the next one.